The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome to the Madison Mason Home Group's Wealth Home Ownership First-Time Home Buyer or Step-Up Buyer seminar. We are super excited to have you ladies here. This seminar is powered by one of our amazing preferred lenders, which everybody should have in their pocket when they are looking for a home, because that's the most important piece of a transaction. This is powered by Homebridge Mortgage. Brian Sachs, he's an amazing lender. We use him. A lot of our clients use him. So definitely, when you get through this seminar, you get all the information that you need. Tell a friend, family, or yourself, really have the opportunity to sit down with the lender. So with that being said, we wanted to thank also our partner, the ladies of the Epsilon, aka Epsilon, for really helping us navigate and through this home ownership seminar with the help of their sphere of influence and people that they know on network who want to be homeowners and believe in home ownership and allowing us to be their guide. So my name is India Whitlock. I am the CEO, founder, and team leader of the Madison Mason Home Group, which is powered by some amazing women who will speak on this call: Lolita Carter, Akea Logan, Katrina Jones, Cassandra Taylor, and Khalid Muhammad. We are going to help you navigate through the buying process. So our vision at the Madison Mason Home Group is to open doors to a better living together by enhancing the lives of our clients and team members through exceptional service, creating a client experience, and socially impacting our communities with our philanthropic endeavors. Our mission, which we are going to stand by forever, is to reach, teach, and inspire, which we're going to do today, and empower our communities by creating a better living together through real estate development and residential sales. Next slide, please. So today, the goal is that we are going to talk about home ownership, investing, second and vacation homes, whether you are a right-size buyer, meaning you are leaving one situation, maybe a smaller home, or downsizing, which we call right-sizing, or you are interested, and Brian's going to talk about this a little bit, about buying a multi-unit where you can really capitalize on the equity in that experience by living in one unit and renting out the other unit. So while you are sleeping in your bed, you are constantly making money because you have a multi-unit that you can feed off of, and it's just another vertical to your investment portfolio. So before we get deeper into the slides, I just wanted to, once we get to the end, I just wanted to make everyone aware that you could ask questions. Either put your question in the chat or raise your hand, because we would love to hear your voice. I know this is a webinar, and the only way we can capture and get you the content the way we need to is by doing it this way instead of a Zoom, because we know a lot of people are busy, but if you take 1 or 2 or 3 or 5 things away from this, we did our job. So if you want to ask a question, put it in the chat, or if you would like to, if you want to speak, raise your hand. So with that being said, Lolita is going to talk about the steps to home ownership. I'm sorry, not Lolita, Trina.
I think that's my slide.
I'm sorry. Okay. Sorry.
But good morning, everyone. My name is Akea, and I'm one of the home buying specialists on the team. I've been a realtor now for 3 years, and I've been on the Madison Mason Home Group team for 2 years. I love teaching others about the steps to home ownership and then finding them the home of their dreams, because that's what everyone wants, right? So here it is, the steps to home ownership. It looks simple, right? But we'll definitely walk you through this again as you're actually in the process. But here it is, the steps to home ownership. You select a real estate agent, the Madison Mason Home Group team. Then you obtain financial approval. And if you don't already come with one, then we'll definitely refer you to our preferred lender. Then we'll sit down and we'll analyze your needs in a buyer consultation. Then we'll select properties, we'll view properties, we'll write an offer to purchase the property, and then that's when all the fun begins. We'll negotiate terms in the contract. Then we'll finally accept the contract. Then we'll conduct home inspections, negotiate repairs. You'll obtain funding for closing, and then we'll close on the property and then take possession of the home. But again, don't let this intimidate you. Once you're actually in the process, we'll revisit this again and definitely hold your hand through the process. Next slide.
Okay, so I guess this is me. And I want to welcome everyone here this morning. You know, I have an opportunity to work with many, many, many real estate agents in the Baltimore, Washington area. And I have to tell you, the Madison Mason home team really is tops. You're very fortunate to be associated and on this session, because what I tell you is the level of knowledge and expertise, but most importantly, caring and listening is really what sets all of the ladies on this team apart from and makes them outstanding in the Baltimore metro area. So I'm honored to be here, number one. Who am I? And why should you even listen to me? That's a fair question on a Saturday morning, isn't it? So I am Brian Sachs. If I look familiar or sound familiar, I've been the in-house mortgage expert for WBAL for 20 some years. Been in the industry since 1985. And, again, I'm honored to be here. I will tell you before we dig into the slides a little bit about the market. We're in a market right now that's clearly a seller's market. And what that means is there are way more buyers than there are homes for sale. And that's where working with the Madison Mason home team comes into play because of their skill at negotiation, their persistence, and their knowledge of the market, which all will work to your advantage. But again, I always think it's important for people to understand who you're listening to. You have to be very careful because there's a lot of information on the internet. There's a lot of information from coworkers. There's a lot of information from family members, but your situation may be very, very different than the advice you're getting from folks. The right place to start is here today, and we hope to share some knowledge with you because, candidly, the more knowledge you have, the better decisions you make. And so we're going to learn about the 3 different types of lenders, which one might be best, how to budget so that you can make this comfortable for yourself, some different financing options and programs, how to buy a home, for example, if you don't have perfect credit. I saw an interesting statistic that said 60% of the population of America has a credit score under 660. So, actually, before I go on, I just want to, I forgot to do something really important. Can everybody here just type in yes if you can hear and see the screen? If you can hear me and see the screen, we want to make sure everybody can hear and see it. So if you don't mind, just type in yes. If you can't hear me or see the screen, I guess you're not going to type it in. But, okay, good. Here we go. All right, beautiful. So again, thank you, everyone. Number 5 here is really critical because while everyone is sharing with you what to do, sometimes it's even more important to learn what not to do, what mistakes to avoid, because mistakes can be costly. And then we're going to share a document that actually increases your negotiating power. So let's get the elephant in the room off the table first. Where are interest rates and what's likely to happen? Rates are still phenomenal. It's a great, great time to buy a home. If you own a home, it's a great time to refinance a home. It's a great time if you have a home to sell a home and buy another. We're in a great, great opportune time. To give you all a little perspective, I told you I've been in the business for 30 some years. And when I started, I hope none of you are driving. If you are, pull over because this is going to be shocking, right? When I started, rates were 18.5%. So to think where we are today in the market, we are at phenomenal interest rates, and it's a perfect time. And even though they are expected to go up, still a great time. They're not going to skyrocket back to 18.5 or 9 or 10, but the sooner you do things, assuming it fits into your plan and your life, the sooner you do things, the better. So why do people rent? And you might be able to identify with some of these. Oftentimes people rent because they're new to the area and they're just trying to get their bearings and kind of understand the market and where they might want to be or not be. Sometimes folks are renting because they think they need a lot of money to put down on a home. We're going to fix that here today. Some people think it's really hard to qualify for a mortgage. Well, nothing could be further from the truth. It's actually easier now than it has been in a decade. Maybe they feel they can't afford a mortgage payment. And I'm going to share a statistic with you right now that is incredible. The Baltimore, Washington, so Baltimore, Silver Spring, that Baltimore, Washington corridor, a study was done that showed that the top 10 areas in the United States where it's cheaper to own a home than it is to rent, and Baltimore and Silver Spring were in the top 5. So it's cheaper to own a home in Baltimore than it is to rent. And you know that. If you're renting, you see your rents going up at a crazy pace. And some people feel that past issues, including bankruptcies or foreclosures, will stop them. And the truth is, it may slow you down, but it's not going to stop you. And I remember very clearly a closing I had with the Madison Mason Group with a gentleman who was a single dad with 3 kids, I believe, all boys, young. And we started with him. He had some issues. He clearly had some issues. And we worked with him. Are you ready for this, folks? We worked with him for 3 years. And we got him into a home, and he sat at the settlement. India will remember this, I think. And he cried because he said, "You were the only group that actually listened to me and helped me and had faith in me." And now he is in his own home with his young children, raising them. He didn't think he could, and we got him there. It took a little bit, but we got him there. So let's talk about loan types. There really are 3 basic loan types. One of those loan types is FHA. FHA stands for the Federal Housing Administration. The benefits to the program: low down payments, 3.5%. All the money can come from a seller or a gift from a relative, or even some of the first-time home buyer products that we offer. It's a little easier to qualify. They're a little bit easier on credit issues and credit scores. And they allow you to qualify for a little bit more home. The downside, you have to use an FHA approved lender. The appraisals are a little bit stricter than a conventional loan, and you will pay what's called mortgage insurance. That's insurance that protects us, the lender, in case you don't pay. The second loan would be a VA loan, and VA, in my opinion, is the best program out there. And candidly, it should be. Why shouldn't we assist those who protected and defended our country? I mean, it seems obvious, right? But for a VA loan, if you're a veteran, it's only eligible for a veteran and a spouse or 2 veterans. There is no down payment, very liberal qualifying ratios. Many people don't realize, but reservists who have 6 years in the reserves are also eligible. The VA benefits, one of the few benefits that VA offers that actually reoccurs. And what I mean by that is if you have a VA loan and you sell that property, you can get another VA loan. So great product, great program. Then we have our standard conventional loans. Really here, the minimum down payment is 5%. Sometimes we're able to allow buyers to put down as little as 3%. If you put 20% down, you know, everybody has this fallacy in their mind that you have to put 20% down on a home. You do not. But if you do have funds to use and you can put 20% down and have good credit, conventional is typically going to be a way for you to consider. And, you know, our goal here, by the way, in giving you this knowledge is just to give you an overview. Because really what we pride ourselves on doing is actually sitting down with you, listening to your goals, listening to your desires and your comfort levels, and then customizing and presenting you with the various options that are right for your situation. The coworker who's giving you guidance in the next cubicle, well, what happened for them may or may not be appropriate for you. Their situation might be different than your situation or goals. So you have to be very careful. There is actually another program I didn't mention, and that program is USDA. And the USDA program is for rural properties. Think Cecil County, Carroll County, Western Maryland. So for rural properties, there is a USDA program, and they do allow you to put zero down. So if any of you are considering a rural property, let us know, and we can certainly tell you a little more about that product. So again, here are the myths that float around on the internet and in the cubicles and at the family gatherings. I can't purchase a home because I think I need a lot of money down for closing and settlement. Well, the truth is, how much do you need? The answer is all of these are options, but we just talked about two programs where you can get in with zero money down. There are grant programs available for first-time buyers. And here's another misconception. There are programs available even if you're not a first-time home buyer. So if you have not owned a home in the last 3 years, we can still get you possibly get you some of that first-time buyer funds or state grant monies. So, you know, we talk about, I want you all to think about sort of two buckets in front of you. And one of those buckets will be the down payment on the home. And we know now, right, that could be as little as zero, could be as little as 3%. And then the other bucket is for closing costs. And closing costs in Maryland average somewhere in the 4 to 4.5% range of the purchase price. So if you're buying a house for $200,000, let's say, you know, your closing costs are probably going to be in that $8,000 to $9,000 range. Those are made up of lender charges, appraisal, credit report, flood certification, title company charges. Title companies will conduct a settlement. They will do a survey to make sure your neighbor's fence is not on your yard and vice versa. They will issue title insurance, do a title exam to make sure that there aren't liens against the property and that the seller can actually sell you the property. And then there are state and local taxes, documentary stamps, transfer taxes. If you are a first-time home buyer in the state of Maryland, well, then you're going to get a 0.25% discount on the transfer tax. And so Latrell has a question, and Latrell's question is, when you say zero money down, are you referring to just down payment and not including the closing costs? And so, yes, Latrell, think again of these two buckets, one bucket being down payment, one bucket being closing costs. So there are programs actually that can cover closing costs, and we're going to talk about that in a moment as well. So here's some ways to think about getting funds if you don't have enough. Sometimes buyers will get a gift from a family member. I bet you didn't know this. Sometimes we, as the lender, can give you some money towards closing. There are state grants, city grants, federal grants. There are secured loans. Oftentimes, folks, instead of taking money from a retirement account like a 401k, or if you're a government worker, a TSP, oftentimes you can borrow against that money. If you have a Roth IRA, you can take money out not taxable. And this last point, all the ladies on the Madison Mason home team are experts at negotiation. But I have to tell you, this is a really, really tough market. And I told you that when we started, there are way more buyers than there are homes for sale. Sometimes it can be negotiated to have the seller help you with closing, but that's getting harder and harder and harder in this market. So Karen has a question. Will your interest be higher if you put less than 20% down? No. Your interest rate's going to be based on a couple things. It's going to be based on the loan program you use. It's going to be based on your credit, and a number of other market factors of what's happening in interest rates at that time. So for an FHA loan, as we said, the seller can help you with all the closing costs. Same thing on a VA loan. On a conventional loan, there are some limitations, but again, right now the market is really, you want to have as much of your own funds so that you present yourself as a strong buyer. So credit. I can't buy a home because I had credit issues. Well, you and the rest of the world, right? Everybody has had something at some point in their life. And the reality is that, again, we can go down with some programs into the 580s, 620s, but one of the things that we pride ourselves on is actually helping you understand your credit and what impacts it. And one of the things that I'm going to give you two mistakes to avoid here, right? One of the things that impacts your credit the most is your balance to your high credit. So if you have a credit card with $1,000 credit line, make sure you never, ever, ever, and that means never, never, ever let that balance go above 300. Here's what that doesn't mean. It doesn't mean charge 900 and pay it off immediately the next month. That will hurt you. Just pretend that that card only has a $300 credit limit and never let it go above that. So that's called usage, and it makes up 35% of your credit. The other thing that impacts your credit score is the age of your credit and the type of credit. So if you have old store charges or credit cards that you don't use, don't close them. Closing them will hurt you. And sometimes the creditor will close your account. So I would go in, like if you have an old Macy's account that you never use, go in there, buy a t-shirt, whatever, something inexpensive, perfume, whatever, and pay it right off. Use it at least once or twice a year. So here's something we're asked all the time. What is my credit? Why is my credit score different than what I see online? And won't you running my credit report hurt my score? And the truth is, two things. Number one, when a mortgage company runs your credit, it does not impact your credit score. And to go further, if you're checking with multiple mortgage companies, as long as the credit is run within a 30, and we don't know the exact time frame, but we do suspect it's 30 to 40 days. In that 30 to 40 day window, if you go to 5 different mortgage companies and they all run your credit, well, the credit bureaus acknowledge that you're not buying 5 houses, right? So that it really will not impact your score. It's a hard hit, but it won't impact your score, and they treat it as one pull. The other thing here is I often have clients, They'll look online or Credit Karma or one of these credit card companies, give you your credit or your bank statement, and the score is very different than the one I pull. Why is that? Well, let me explain. There are 3 scoring models for credit. There is a scoring model when you apply for a credit card or store charge. There is a scoring model when you apply for a installment loan, car loan, school loan, personal loan. And then there's a scoring model when you apply for a mortgage. If you go to Credit Karma or see online, like you have Mint or one of these apps, and you pull your credit or Capital One, most of the credit card companies give you your score also. So if you're seeing that score is based on a credit card application scoring model. It's not wrong. It's just different. So Amira has a question, and it says, if you use down payment assistance programs, is your interest rate typically higher? And the answer is maybe. So, for example, if you use the Maryland mortgage program, I just locked in a loan a few days ago, and the Maryland mortgage program, the state of Maryland sets the rate. If you call 42 different mortgage companies and you're using the Maryland mortgage program, they're all going to quote you the same rate because the state of Maryland sets that rate, right? And so that rate is sometimes a little higher, sometimes a little bit lower. As we're speaking today, their rate is higher than the market. Sometimes it's the same. Very rarely do I see it be lower. So I hope that answered your question, Myra. What do you do if you've had a bankruptcy, foreclosure, or other credit issue? So let me give you the rules. If you are a veteran or going FHA, the rule is 2 years discharge from a bankruptcy, Chapter 7. However, if you are, if what happened to you was an extenuating circumstance beyond your control, loss of a job, medical illness, those sorts of things. If it was due to an extenuating circumstance and you can prove it and you've reestablished good credit, we can help you after 1 year. So don't think bankruptcy or foreclosure will stop you. In many cases, you are eligible way quicker than you thought. And if anything, we can guide you while you do get back on track. If you had a Chapter 13 bankruptcy, you don't even have to be discharged. We can do it after 1 year. So, we've talked a little bit about this. What do you do if you don't have money for down payment or closing? If that's your challenge, call us anyway and let us help you get on a plan and get going. What do you do if you can't afford the payments? Well, look, I'm not an accountant. I don't believe anyone on the Madison Mason Home Group is an accountant or an attorney or a financial planner. I'm none of those things. And I don't believe anyone on the Madison Mason Home Group team are. But even if they are, check with your professionals. Generally, the interest on your mortgage and your property taxes are tax deductible. But here's the problem with getting a refund. This is the time of year, right, where you see people walking around with a smile on their face, like a silly smile, and they can't get it off their face because they just got a big, big refund check. Well, let me tell you, what you've done when you've gotten a refund check is you've given the government an interest-free loan. I hear people say it's forced savings. Nothing could be further from the truth because they're paying you zero interest. So you wouldn't put money in the bank, zero. But right now, while we're in a period of high inflation, that money coming back to you 16, 18 months later, it's actually more than 5%. It's 10%. So every dollar you're getting that you're getting back only has 90 cents buying power because inflation has eroded it. And you could be getting that money back every month instead. So what I mean by that is if you made a budget and you said, okay, I have a car, I have insurance, utilities, food, entertainment, clothing, blah, 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 and I'm comfortable paying $1,000. Well, if you're getting a $3,600 tax refund, which is the average refund, instead of getting $3,600 at the end of the year, you can adjust your withholding so you're getting $300 extra. It's your money. You're getting $300 extra each month in your paychecks instead of getting $3,600 at the end of the year. And you, at the end of the year, you shouldn't know and you shouldn't receive a refund. You're just getting your refund back every month. You need to do this with some guidance, some professional guidance. But let me know. I'm just curious. Type into the box here. Has everyone learned one thing they didn't know so far? You can put 0. It's fair. But type in the box. You have anybody learn one thing you didn't know of? Okay, good. Karen did. Anybody else? Amira? Latrell? Who else? Got a lot of folks here this morning. Okay, Kiva, Marie, Miracle, Danae, Keisha, Denise. All right. So some of you are learning quite a bit. Amira, how are you, Amira? Kristen, beautiful. Good. So we want to make sure that your time here this morning is well spent. So let's talk about different types of lenders. There are independent mortgage bankers. That's what we are. There are mortgage brokers. There are bank-owned mortgage bankers and small portfolio lenders. Which one is best? You know, one of the frustrations is you talk to 4 different lenders and you get 4 different answers. Why would that be? Well, let's talk about it. So many folks think that, when you go to Wells Fargo, I'm going to pick on Wells Fargo, but it's any bank actually, that if you go to Wells Fargo, you're getting a mortgage from Wells Fargo. That's not true. The truth is Wells Fargo is a bank-owned, they're number 3, a bank-owned mortgage company. So that means Wells Fargo, PNC, Bank of America, they decided to start a mortgage company and they called it Bank of America Mortgage, PNC Mortgage, and so forth. They act the same way we do as an independent mortgage banker. We service about $39 billion worth of loans. But an independent mortgage banker has sometimes a little more flexibility than a bank-owned mortgage company. Usually we have guidelines, and then the bank-owned mortgage companies have guidelines on top of that. Then there are mortgage brokers. A mortgage broker has no money. They're going around and trying to place your loan somewhere. So, I mean, my personal feeling about mortgage broker, you can't always feel comfortable because, again, they can't control the transactions. A bank-owned mortgage company or an independent mortgage banker like us, we're lending you our funds. And so we have total control over the transaction. A mortgage broker isn't lending you funds. They have to place you somewhere. So they're at the mercy of whatever lenders they're placing you with. Again, the big misconception is if you have, $5,000 in ABC Bank and you're their customer, you're going to get some sort of preferential treatment. That's not usually the case. Now, if you have 50 million in their bank, well, yeah, you probably have a private banker and you will get preferential treatment. Here are, nobody really believes anything. I can say anything I want about myself, right? But here are some success stories about me from the Baltimore Sun, from the Daily Record, and others. And it's important, again, for you to know that. So let's jump into some of the mistakes. So Shannon has a question. What would you suggest to be the best first step toward creating a budget to save toward buying your first home, especially taking into account student loans? Well, number 1, Shannon, I would start with what you bring home. I would amend what you bring home by the amount you're getting in a tax refund. So if you're getting a tax refund, I would change your withholding so you can get that money coming back every month. and just list out what your expenses are, food, clothing, other bills, utilities, and then you'll have your comfort level right there, right? That bottom number will be your comfort level, and then I would suggest reaching out to the Madison Mason Home Group and scheduling a session, and I'm certainly happy to be involved, and we can help you with your budget as well. But that is a great step. So let me ask you all a question. And this is a dumb question, so I'm just going to tell you it's a dumb question, but it's an important question. Who here would give me $1,000 if I promised never to give it back to you? Never, ever. And to aggravate you a little bit for some period of time. You don't even have to answer, because I know nobody would do that, right? But that's what happens, by the way. The first step in the process is getting pre-approved. Some sellers won't even allow the home to be shown without a pre-approval letter in this market. But you want to have your mortgage in place. Why? Well, number one, because you want to make sure you know what your payments are going to be. You need to know how much of your funds you're going to use. And the Madison Mason Home Group realtors need to know what price ranges to share with you. So your first step really is honestly getting pre-approved. Why did I ask you that silly question? Because if you don't do it that way and you find a house and you will spend money for an appraisal, a home inspection, a pest inspection, and if that deal does not go through, that money is not refunded to you. It's about $1,000, and you will never get it back if that transaction doesn't go through. So that's the first step. The second step is getting pre-qualified versus getting pre-approved. Pre-qualified means I speak with you, or you speak with a lender, you tell them everything, and they say, "Oh, that sounds good. You're fine." Well, I hate to say it, that's almost like toilet paper. It's useless. It's worthless. What you want to get is pre-approved. And that means that the lender has actually approved your loan and the money is actually there waiting for you to find a home. And I will share with you a big idea right now. We actually have a program, if you get pre-approved, where you can lock in your interest rates at these low levels while you shop for a home. And that's huge, folks, huge. So make sure you're getting pre-approved. That means the lender is running a credit report. It means you've sent in your W-2s, your pay stubs, your bank statements. And by the way, for those of you that are 1099 employees, meaning you work in the gig economy, maybe you drive Uber, maybe you have some sort of other 1099 contract job, or if you're self-employed and you're writing off a lot of expenses, you need to call too, because we have some great products that really I think would make you very happy and help you get into a home that many other lenders just don't offer. So I'm going to let you take a screenshot, everyone. I'm going to leave this up here for a second so you can take a screenshot. But these are the items we will need. And, I'm not the kind of lender that's going to send you online and tell you, hey, go fill out the papers and I'll give you a call. I like to speak to you. I want to understand your concerns. I want to answer your questions. I want to make sure you have the knowledge, and I want to make sure that you're ready when you go out looking for a home, that you're pre-approved and, we know it's going to be a smooth transaction. So here is another mistake to avoid. I personally feel that this is still a personal transaction. It's what I just said. I'm just not a big fan of working with online lending, out-of-state lenders. Invariably, you often have last-minute challenges that usually aren't too good. Mistake number 4, you got to know what your credit score is. It's not your Credit Karma score. We talked about that. Mistake number 5, avoiding ugly. I'm going to tell you right now, the best opportunity, one of the best opportunities in the market right now is finding ugly homes. You know, the beautiful homes, there's a lot of serious competition, but not too many people are looking at the ugly homes. And I think the ugly homes right now present one of the best opportunities. We have a program called the FHA 203K or the Fannie Mae Homestyle Loan. And this loan, even if you're an investor, by the way, this loan will allow you to buy the home, include all of the renovations. What does that mean? That means if you want to put on a deck, God bless you, do it. Want to finish the basement? Do it. You pick out the kitchen cabinets. You pick out the paint. You pick out the tile, the carpet, the granite, even the appliances. And you get one loan that includes the purchase of the property and the renovation. I'm going to tell you another huge opportunity. So I know we've been on here for about 45 minutes. Let me ask you all this question. And pause for a second. Whatever you're doing, really pay attention to this, okay? Who in here would like to own a home, have others pay your mortgage for you, create an additional source of income for yourself, and have a huge tax write-off? Who would like to know about that? Let me know. Danae, Keisha, Myra, Shannon. All right. Romaine wants to. Who else? Latrell, who else? Miracle, come on, wake up, folks. Who else wants to know about this? Lois, Kristen. Got to be more than that. We got almost 30 people on. Amira wants to hear about it. Okay, who else? All right, here we go. Denise, Kiva, Naima. So let me explain something to you. There are homes out there that are 2 to 4 unit homes, and they're called multifamily. So, if you buy a multifamily home, I'm just going to give you an example because this is a real life example of a loan that just closed, right? Our client, actually was a Madison Mason Home Group. They bought a 4-unit property. They're living in one of the units. The units are renting for $2,000 a month, and their mortgage payment is $2,500. So follow me, okay? They've got 3 other units bringing in $6,000 a month, 2,000 times 3 units. Their unit, their mortgage payment is $2,500. So watch this. Their mortgage is paid for, and they've now created, are you ready? $42,000 a year in income. You know, so many buyers struggle with, should I buy my investment property first, or should I buy my primary home first? What do I do? Well, why not kill 2 birds with 1 stone? So this client has their mortgage payment paid for, so it's 0, right? And the other 3 units are bringing in a profit, extra income of $42,000 a year. And because those 3 other units are investment, you get a big tax write-off. So just a real opportunity, and very few agents are well versed in this. India, Katrina, Lolita, Akea, Katrina, they're all very, very well versed in this. And it's another reason to use the expertise of the Madison Mason Home Group. So if any of you are interested in reaching out, here's my contact information. And so Amira wants to know, is the down payment amount higher? You know what, Amira? Brilliant question. Thank you. You could buy, if you're a veteran, you can buy up to a 4-unit with no money down. If you are going FHA, you could buy an FHA unit, 4-unit with only 3.5% down. The problem is you can't use any grant money if you're buying a multifamily. The Maryland Mortgage Program doesn't allow multifamily dwellings. But great question. So I hope each and every one of you will contact myself and the Madison Mason Home Group. I hope that you all feel the time here today was time well spent. There is no cost to getting pre-approved. There is no cost for a consultation. And again, I think it's a very, very opportune time to do this. And we certainly look forward to hearing from each and every one of you.
Thank you, Brian. So thank you so much, everybody. This is Lolita Carter. I'm another buyer specialist on the Madison Mason Home Group. And we are so glad that you joined us today. We realize that this is a lot of information, but Brian does such a great job of giving you the information and describing and giving you details that are so helpful. He's a wealth of knowledge. So I hope that you will utilize him in your process, and us as well. Use us as a resource. We would love to help you on your journey to home ownership for sure. The next slide is where we want you to be. We want to include you on some of these pictures of people that have reached one of the happiest days in their lives, where they have taken the keys and they've closed, reached the day of settlement for their home. And we want you to go on the journey with us, and we want to help and we want to guide you. So please feel free to reach out to us at hello@Madison Mason Home Group. If one of us invited you to the seminar, certainly reach out to myself or Akea or Katrina or India individually, or else you can just reach out to Hello, and we will definitely get back with you so that we can schedule some time and speak with you, I guess, personally, to find out what your goals are and how we can assist you. So thank you, everybody, for joining us today, and we look forward to working with you in the very near future.
But before everyone goes, thank you, Lolita, for that end. But before everybody hangs up, because we got about maybe 12 or 15 minutes left, if you have any questions for us or any limiting beliefs or things that people have kind of put in your mind about home ownership, or, just different things that you're unaware of, please, put it in the chat or raise your hand. And we are really, open to answering those questions in the last bit of minutes that we have on the seminar. So don't hesitate to really, ask the questions, because the questions are very valid. So I don't want you to think the question is a stupid question, but just, we need to know. We need to know how you feel. We need to know what your expectations are. And we kind of need to know what misinformation that people are giving you about home ownership and the knowledge built around becoming a homeowner.
Okay, so we have some questions, India. First of all, Karen says, thank you so much, Brian and Madison Mason Home Group, for the awesome information. So here's a question from Latrell. I may have missed it, but is there a program that will cover the down payment and the closing costs? There are programs that will cover the down payment or the closing costs, and sometimes we can get the down payment and closing costs covered. It's really case by case, honestly, Latrell. So Evelyn wants to know, does the pre-approval time out? Well, it doesn't time out, but it's a good question, Evelyn. It does have a shelf life. The pre-approval is usually good for 90 days. Remember, folks, we're in a period of rising interest rates right now, and we are one of the few lenders that I know of, maybe the only that I know of, that actually is offering right now our buyers a rate lock protection, a lock and shop. Actually, I think they call it purchase power program, but it's lock and shop. And what that means is you get pre-approved, you have your mortgage in place, and we will protect that interest rate while you go shopping for a home. If rates go up, you're covered. If rates go down, you can still get that lower rate. Here is a question from Keva, I think. Hang on one second, or Kiva. I may have lost it. I'm sorry. Bear with me. Here's a question from, I'll get back to you, Kiva, in a second. Shirley Anna. Shirley Anna wants to know, does the Madison Mason Home Group Management do management services as well? India, I'll let you answer that.
Unfortunately, we personally don't have the bandwidth to support property management. However, we have strategic partners that we feel comfortable with, that we can refer you to some property managers that can really help you navigate that process a little bit better. Because again, we would love to assist. We love to help navigate you through the home ownership process. But we also know our strengths, our weaknesses, and that's not something that we do. But we definitely like to refer you to good people and preferred lenders, as well as preferred property managers that can really help you navigate that process a little bit more, because they are the experts. We're the experts in the world of buying, selling, and information, and their expertise is really dealing with the tenants and, you know, profiling, as far as getting information needed to make sure they give you a good client that will be beneficial to renting one of your spaces in your multi-unit if you decide to go that avenue.
All right. So Kiva, she says, I understand that interest rates are low right now, but some of the prices on these homes are inflated. What if the homes I purchased today isn't worth what I paid for it later? Well, the reality is home prices are likely to continue to go up, and waiting only, you know, lots of people say, oh, I'm just going to wait for prices to come down. Well, what if they don't? I'm not expecting them to come down. And I'm going to wait for rates to come down. Honestly, I'm not expecting that to happen either. So you just get further and further away. I do believe home prices will moderate, but I don't believe they're going to drop. I think the appreciation rate will moderate. So you got to do it. You know, like they say, you can't time the stock market. You're not going to time the real estate market. And we are nowhere near the same circumstances of what happened in 2008. We have inflation. Inflation means rising home prices. We have rising interest rates. So waiting, in my opinion, is not a viable option. What was the name of the FHA program you mentioned with the renovation? The name of that program is the 203K renovation loan. And I have to give ourselves a plug if that's okay. We are the #1 lender in the United States for that program. Can you predict when Latrell wants to know when the buyer's market will return? Yikes, I have no idea. I don't think it's going to be anytime soon. Okay, so we got that question. Danae wants to know, she says, our webinar was very informative. Where should I go to get a credit score? Well, the first thing you do, Danae, is get hold of right here. Hello at the Madison Mason Home Group. We'll run your credit. And again, it won't impact your credit, and there's no charge. Let's see. So Anthony wants to know, does a pure investment property require 20% down? No, actually it requires 15% down. And we actually have some products that you can use and hold it in the name of an LLC. We also have some no income investor products, and that Fannie Mae home style renovation loan we spoke about can also be used by investors to buy a home and do the renovations. Kiva wants to know, are there any programs for people in healthcare? There are programs out there for nurses. There are programs out there for police officers, firefighters, teachers. So again, it all begins with this consultation. There's no way we could cover everything. And I know I said it a couple times today. Everyone's situation and circumstance is different. And what we pride ourselves on is customizing it for you. So I think that's all the questions. I want to thank you all for being here. I'm honored that the Madison Mason Home Group asked me to be here. And I look forward to speaking to each and every one of you that attended and let us have a free, no obligation consultation with you to see where you stand.
So So I kind of wanted to end it because I know we have 6 minutes left, and there's a lot of people on the call, and we are excited about that level of participation. I'm excited about it, but I just want everybody to be aware that in order for us to create a better living together, in order for us to continue to reach, teach, and inspire you guys, we really pride ourselves on creating a client experience through creating a team around your experience. And that team not only includes us, but it includes your family. So, you know, sometimes we don't want to tell everybody everything, but also make sure you get that one key person who you know, like, and trust, and where you value their opinion. Because for a lot of us, this is probably one of the biggest purchases in your life. So while this is the biggest purchase in your life, this is one purchase that will increase your net worth. And that's a big phrase to really take in, your net worth. And increasing your net worth is really, really important to us. And the only way that we can do that is by helping you create a team around this experience. So when you want to create and add more verticals to your net worth, you have a team to do that. So please take some time to schedule a time with Brian, because what we don't like and we don't want to see is you walking backwards. And walking backwards is you go out and you go out with an unexperienced agent, you discount the experience, and then you don't even know what you're qualified for. Me personally, I want to know what the cost is first before I go out and spend any type of time, money, or anything on any type of purchase that I purchase, whether it's clothes, jewelry, food, whatever. I want to know the cost associated with my buy-in. So with that being said, please email us, schedule a consultation, get on our calendar, even if it's only for 10 minutes, right? Have your questions down, allow us to answer them. Or if you just want to get to know more about us and how you can be involved in any philanthropic endeavors that we have, just be involved, be present, be consistent, and be available.
All right. And with that, I hope everyone has a wonderful, wonderful day. And I thank you all again for joining us.